Okay, everybody, it's me, Gregory Mannarino. It is Tuesday, July 27, 2021. I have a lot of stuff to talk about here with you. I'm going to ask you right here and now to share this video before you even finish watching it, because I'm going to cover some very important things and people need to hear this. So let's talk about the market. We'll start off with that. Today, stocks fell under some pressure. Nothing major. Yesterday we did hit a new record high. But again, if you look at the report I did on Sunday, my markets a look ahead, I explained to you then on Sunday, I expected this market to kind of hold its own, kind of trade sideways, maybe give back a little bit prior to the Federal Reserve announcement tomorrow. So the market has played out exactly as I said it would. Tomorrow, expect volatility. If this market decides to peel off several hundred points, people, it's a buying opportunity. I don't know another way to put it. The market is not going to crash. What the market is going to get, well, you know what? Hold that thought, because like I said, I have a lot to talk to you about. Gold and silver. Silver got hammered, falling over 2%. Gold also fractional loss, despite the dollar falling. The dollar fell today in value. Okay, it's in a bubble. Forget about it. The dollar is going lower. I can't even believe the dollar is still where it is. In the face of everything that's going on here right now. A central bank that has gone wild. This should be called Central Banks Gone Wild, this video. Cryptocurrencies, people holding their own, maybe slight losses across the board here. The 10-year yield was the big deal of the day to me, falling out of what I would say a stable range. A lot of cash making its way into the debt market. 10-year yield came down. Dollar came down. No dollar strength today, which would be the typical fear trade. So what this is pointing towards is kind of what I outlined on Sunday. The market wants to hear what's going to come out of the mouth of its mouth. It being the Federal Reserve. Crude oil today also fell under some pressure here. Okay, so like I said earlier today, not a great setup for the market. We're on hold until tomorrow. Tomorrow, it's going to be the Fed out here explaining they will maintain accommodative or emergency monetary policy, continuing to buy assets across the board, issuing debt through one door, buying it back through another, which is massively inflationary. You know what? Hold that thought. So today, I'm flipping around like I usually do, Bloomberg, CNBC, Fox Business. So what they are doing, the narrative on the mainstream financial channels is exactly what you and I would expect. Because I said, they are blaming supply chain disruptions and the rising cost of energy for inflation. They're not pointing their finger at the Federal Reserve. All they're saying is, when's the Fed going to taper? When's the Fed going to taper? How about not for a very long time? Now, something is being set up here I want to talk about. Let's first address the IMF, the International Monetary Fund, who several weeks ago said inflation more than likely is not transitory. Well, today we heard again from the IMF, same statement. They're warning that this inflation situation that we're seeing, okay, I didn't mean that to rhyme, but it is. It did rhyme here. They are warning inflation does not appear to be transitory. Now understand, the market don't give a damn about this. The market does not care about inflation. The Federal Reserve chairperson does not care about inflation. He does not care about the rising cost of living. He said, quote, it is not widespread, or basically inflation is contained. Now let me ask you, you live like me, where is inflation contained to? Well, going off of that, how about this? we found out today, and this is no surprise, home prices are surging at their fastest pace ever. Meanwhile, unsold homes now hit a 13-year high. So we have a situation where home values are surging, and we have a surplus of homes on the market now. You understand? It's insane. Absolutely unfreaking believable. So anyway, I want to talk about this whole thing where we're moving into. It appears, okay, that if you recall, several weeks ago, I explained to all of you, you can expect a 1-2 punch with regard to the shutdown of the economy. What are they doing right now? They're talking about reinstituting a mask mandate, even for those who have got the jab. See, because the people who got the jab can still catch the disease and spread it. But you're not supposed to know that. No. Sorry. Anyway, so there's the 1-2 punch. What they're looking to do here, you can see the hysteria. You see how they're hyping this up on the news, even the financial channels here. These new variants, just like I said, just like we both knew was going to happen. They're going to hit the economy again with possibly another shutdown. Why would they do this? Again, this whole thing is not what it seems. You all know that. Is the virus real? Yes, the virus is real. Are these variants real? Yes, the variants are real too. However, this entire thing was instituted to shut down the economy, to allow this merger to occur between corporations and this new American government system. Used to be defined as fascism, but I don't know what to call it now. So this was also put into effect to wipe out small businesses so these corporations could gain more market share. You understand? So what you could plan on happening here, again, is more than likely, again, they're going to start it off easy. They want to see how people are going to digest it. Are people going to submit to more mask mandates? Yes, they will. They're going to do that. Period. The end. Then, there's going to be a new variant, a new thing. It's going to be worse. Of course, they're going to shut down segments of the economy. And that's going to be the 1-2 punch. You're still going to see the stock market go higher. Economy shut down. Free fall. Doesn't matter. Stock market will go up. Now, what this will do as well is allow the Federal Reserve to finish what it started. That is to become the lender, buyer of last resort. It has no intention, the Fed, has no intention of raising rates, of tapering. It just needs another excuse. So shut down the economy, another excuse to move goalposts. The Fed will increase asset purchases like I've explained, and there we go. There's the scenario. I want you to think about what I just told you because it's starting now, and this is exactly how it's going to unfold. It's just a fact. So just pay attention to these things. So anyway, let's just recap what's going on here. Market remains in a holding pattern, more or less. Go look at the video I did on Sunday. Markets a look ahead. Market has played out exactly like I said it would. Okay. Tomorrow, wild day. I'm expecting a lot of volatility. If, in fact, for my lions out here, this market sells off, I'm going to tell you what I will be doing. I will be adding to current positions that I hold. Now, I am a net seller. Okay, go to my website, traderschoice.net, top of the second page. You will see all of my stock picks there, okay? All of them. I am a net seller of options. I very rarely buy calls anymore. It's a bad place to be. Very difficult to fight time decay, to fight the fakery in the market. You understand? So by selling puts, okay, on the market, I'm sitting pretty here. And I'm hoping that more of you lions out here are learning to do that, and maybe more importantly, set up credit spreads. I just sent out a whole 7 strategies to all of you that subscribe to my free newsletter. Link in the description of the video. Things you should consider, how to play this market, minimize risk. People, that's what it's all about. All right, I'm trying so hard to help you. With regard to the pullback in silver, it's a buying opportunity. Cryptocurrencies are going higher. Okay, a lot of volatility here. In fact, it's insane, but that's the way these things trade. Anyway, pay attention to what's going on tomorrow. I'm going to keep you all on top of this, what's going to come out of its mouth tomorrow. And listen to the dog shit narrative. Okay, supply chain disruptions. Oh, that's what's causing inflation. Oh, rising energy costs. That's what's causing inflation. It's not the Fed. Remember, look here. Don't look here. What happened? Let me ask you while we're on the topic of the Federal Reserve's mandate, okay, by the American people of price stability. Prices are not stable at all. So let me ask you while we're talking, when do you think one of our representatives is going to call the Fed chair in front of a committee to have him explain why the Fed is not adhering to its mandate of price stability? Why is the Federal Reserve running its inflation creation machine, buying debt, issuing debt through one door, buying it through another? When do you think that's going to happen? Do you want to hold your breath? No, it's not going to happen because, again, nothing here, people, is what it seems. Expect the MEX to come back, another shutdown, the Federal Reserve move goalposts, buy more assets, increase asset purchases. Everything I've been telling you is happening. And it's happening right now. All right, I'm out of here. Love you a lot. Please share this video. Very important. And I'll see you tomorrow.